What's good on my stock market? Homies, we got a big one today. The stock market has been on fire. Growth stocks, they are bouncing back. It looks like they've hit that bottom, and now is the time that they start to rebound, and those that bought the dip are going to be reaping the rewards of those growth stock dip buys. We're going to be talking about growth stocks. We'll take a look at my $30,000 growth stock portfolio and go one by one through each of my holdings. And we're also going to be looking at the AMC stock short squeeze. AMC stock has gone to the moon. Is it too late to get in, or is there still some meat on the bone with AMC? Let's jump right into the charts. Got the AMC chart here on the screen using my Webull platform, desktop platform. Get your 2 free stocks from Webull using the link in the description. Those stocks will be valued up to $1,800, and you get free access to this desktop platform. All right, so AMC, this is an epic short squeeze, guys. Take note of this short squeeze. This happens maybe once every couple years. It's not often that we see a short squeeze of this magnitude. AMC squeezing from the 10s all the way up to $36 per share. What's next for AMC? Is it still a good investment? Because we talked about on the channel how we thought it was too cheap down here at $9. We even thought it was too cheap at $12. Because Regal Cinemas, AMC's biggest competitor, or one of their biggest competitors, shuttered their doors. They closed down. That leaves more market share open for AMC. Also, I think short sellers overplayed the argument that people don't want to go to the movies anymore. Sure, that's a valid argument. Streaming is big. Cord cutting is here to stay. People like to watch content from the comfort of their home. But people are still going to go to movie theaters, and AMC as a company will survive. So those short sellers who thought AMC was going to go out of business, and they were piling in short at the $5, $6, $7, $8 area, they're underwater right now. They're covering, and this is creating a buying frenzy from both sides of the aisle. If we look at a faster time frame, do a little technical analysis here, we can try to determine where this thing is headed. It's currently squeezing into the close. After hours, I'm making this video Tuesday afternoon, and it's squeezing into the close up near these $36 highs. If we break out over those highs, who knows how high this can go. But this thing is dangerous. It is going to be volatile. No longer is there intrinsic value in the stock. What do I mean by that? I mean, at $5 a share, I thought it was a value buy. At $10 a share, I thought it was too cheap, right? I thought it was a good value. But at $35 a share, it is no longer a good long-term buy. That's just my opinion. That may anger some people. I thought it was a great deal in this area. I would be taking profit if I was holding up in that $36 area. But if we look at the faster time frame, there is going to be trades to be had on this AMC stock as it continues to squeeze. There's going to be volatility here, and we can look to buy the dips at areas of support, but we got to respect those stop losses, because this thing could move 20% down to the downside, or it could move another 100% to the upside. So there is going to be volatility. Volatility brings opportunity, but you gotta respect the stock. The stock is making big moves, so respect it. It's like respecting your grandma. Volatile stocks and your grandma, you gotta respect them. Let's talk about NEO stock. We called it. We called it 2 weeks ago. We called it on the channel that this was a bottom, and those who watched those videos where we called this swing trade on NEO and Xpeng Motors are getting paid. This thing hit a bottom at 32. Now we're trading at 42. That is a big move. It is coming into resistance. We'll be taking some profit off the table. Let's look at Xpeng Motors, ticker XPEV. We called this one in that same video as well. Bottom here at 23, boom, to 34. Let's run through the Fubo trade. Still holding Fubo, up a couple dollars on that position, but you know, not ready to even consider taking it off the table. Let's look at what we're holding in the account right now. We are currently trading at a value of about $31,000 in the account. We've been chopping around over the last couple of months, but considering how growth stocks have done over the last couple of months, I think we've done very well. You know, growth stocks probably were down 30% on average. Our portfolio, we held up pretty good, and we're approaching those all-time highs again. We'll try to break the $40,000 mark here in the account over the next couple of months. By far, the biggest holding in this account is Hyliion, probably making up 75% or so of my portfolio. And I know I always preach diversify, diversify, diversify. And if you're a newer investor, yes, diversification will protect you. But diversification also limits the upside potential of your portfolio. I'm 30 years old. This is my small account. I have a much larger account. So I said, what the heck? I think Hyliion's way too cheap down here at $7, $8, $9, $10 a share. So I started loading the boat. I actually started loading the boat on Hyliion up at $21 a share. But we got that cost average down to $10.49 per share. Just love that cost average. I think this is a $20 stock by the end of the year. We think it's a $50 stock within the next couple of years. So if this thing continues to trade down here, we will continue to add. We're doing a sale. This video is sponsored by Touchdown Trades University, touchdowntrades.com. It's an all-in-one trading education suite, gives you access to the course and lifetime access to the chat, where I send out my buy and sell alerts. Touchdowntrades.com. Use the coupon code in the description, and I'll flash that on the screen as well to save some money. All right, so Hyliion, the biggest position. The second biggest position, PRPO. This is a swing trade. PRPO, a penny stock, got the contract with Amazon to be the only supplier of antibody tests, Rona antibody tests on Amazon Business. Owned 3,000 shares at $4.30. So we're down a couple $1,000s on this position. It's a swing trade, and that's why I took bigger size. Swing trades, you have that set stop loss. So I feel more confident taking on bigger size for a swing trade because I know what my risk is, right? I know I'm risking $3,000 on this trade. So if it hits 3,000, I stop out. That's my stop loss. I almost stopped out today. But I think this stock rallies, bounces back, and this swing trade works out. I'm even considering adding to that position. We also talked about Fubo. Fubo is a sleeper. It is a sleeper. Fubo TV, online TV streaming. But it is also a sports betting play. DraftKings, Pitt National Gaming, MGM, those gooses are cooked. Fubo is the sleeper in that space. We also own FRSX, down big on this position. This is autonomous driving, robo-taxi play. And we also own XL Fleet, also down big on this position, looking to start adding to XL Fleet. But overall, the portfolio held up really well when growth stocks crashed. Sure, we're off the highs, but we'll be back at all-time highs in no time. Still up over 150% in this portfolio over the last 12 months. So we're still doing real well. That's going to wrap the video up, guys. Just wanted to touch base, talk about my holdings right now and the thesis behind the holdings and the short squeezes in AMC. Wanted to touch base with you guys on those as well. I'll catch you guys in the next one. Make sure to destroy the like button, subscribe, and turn on the notifications. Peace.